Welcome everyone. Thank you for coming along to today's webinar. I'd like to begin by acknowledging the traditional owners of the land from which I'm speaking to you and the traditional custodians of the lands on which each of our online attendees are living and working. I pay my respects to elders past and present. I'd also like to extend a warm welcome to any Aboriginal and Torres Strait Islander people joining us today. I'm John Cox. I'm the Business Development Manager at Data ESG, based here in Canberra. I'm joined by Christine Centofanti, the Marketing Manager for Data ESG, who has organised today's event, setting up the webinar and sending invitations to each of you. I'm also joined by our presenters today, Carolina Doronales. She's an ESG specialist, environmental scientist, and a PhD researcher in climate change at University of Technology, Sydney. And Roger Mills, he is our Manager of Sustainability and Social Impact Strategy. He's a researcher, consultant, environmentalist, and project manager with a passion for environmental sustainability. So welcome to Data ESG's first webinar in a series of webinars over the coming months, focusing on environmental, social, and governance. Today, Carolina and Roger will be presenting today's webinar titled ESG, What Every Australian Business Needs to Know. A little bit of housekeeping. We really encourage you to engage with us today and ask questions. You can do that in the chat, and at the end, Roger and Carolina will answer your questions. I'd now like to hand you over to today's presenter, Carolina and Roger. Over to you guys.
Thank you very much, John. It's really nice to be here. So good afternoon, everyone. Thank you for being here. And I would like also to acknowledge the traditional owners of this land. I am based in Sydney, which is Gadigal land. As John said, my name is Carolina Dornelles, and I'm an environmental scientist and engineer with over 15 years of experience in sustainability. Now working with ESG across Australia. I also have experience in Europe and Latin America. My passion lies in helping organizations transition to a more sustainable, ethical, and resilient way of operating. I'm currently working in Data ESG, an Australian consultancy where we simplify ESG for organizations, helping them not only meet compliance requirements, but also embed sustainability into their core strategy. Today, I want to guide you through the ESG and what it really means, so why it matters now and more than ever, especially here in Australia. So, and how you can start making progress confidently. So I'll share my screen with you, and then we can start. Give me 1 second. Please let me know if everything is good and you can see my screen.
Yeah, something's coming through. Yep, perfect.
Great. So ESG, what every Australian business needs to know. So let's start with a quick overview. ESG stands for environmental, social, and governance. These are the three pillars that define how a business interacts with the world around it, how it protects the environment, contributes to society, and governs itself ethically. So what we're aiming to do today is to demystify ESG because it's often seen as complex and just another compliance burden. But in reality, ESG is about a future-proofing your business. So it's about resilience, risk management, and doing business with a purpose. It's about positioning your business ahead of the curve with while building long-term sustainable value to your organization. And here in Australia, there is a growing movement driven by regulation, investors, and communities demanding that companies step up. So let's break down ESG into three parts, starting with the environmental side, right? So this includes your company's carbon emissions, energy use, water consumption, biodiversity impacts, and waste management. These are all tangible environmental risks and also opportunities. To give you some context, Australian companies emitted over 339 million tons of CO2 just in 2022. But the good news is, those who adopted sustainability practices are cutting energy usage by up to 30%. So they are saving both money and emissions. Next, the social component. So this looks at how a company treats its people, really important. Employees, customers, communities, and how it upholds human rights. So includes diversity and inclusion, health and well-being, and modern slavery risk. A recent PwC study showed that around 61% of Australians are more likely to work for or to buy from a business that is socially responsible. And companies with a strong diversity and inclusion practices are seeing 20% higher innovation and profitability. It's a really interesting number. So, and then we have governance, which underpins everything else. So this is about leadership, decision-making, transparency, active co-behavior, and risk management. Poor governance can be really costly. In fact, in just the past few years, Australian companies have paid over 4 billion in fines due to governance failures. On the other hand, companies with strong ESG governance, they are outperforming their peers by at least 20%. That's what the data shows. So now let's take a moment to clarify an important environmental metric: greenhouse gas emissions, broken down into scope 1, 2, and 3. Scope 1, it's about direct emissions. So from sources you control or you own, like your fleet of vehicles or on-site fuel combustion, for example. Everything you control. Scope 2, it refers to indirect emissions from the generation of electricity, heating, or cooling that you consume but you do not produce. So, for example, the power used in your office or your factory. Scope 3, really important, the most challenging one, but also the most significant one for many companies. These are emissions that occur in a value chain, so such as those produced by your suppliers or even your customers using your product. They are indirect emissions as well, but that you do not control. What does it matters? Because scope 3 often accounts for more than 70% of a company total's emissions. So that means that you can't ignore if you're serious about sustainability. Understanding where your emissions lie, it helps you reduce them effectively and align with emerging reporting standards like NGER, ISSB, TCFD, everything that we'll talk about a bit later, and Roger will talk to you in details later. So what really matters? Like, why does all of this matters to you? Why is that so important? Because the ESG isn't just about being good, but about being smart. It helps your organization to manage risk, stay compliant, attract investment, and build trust. So, as said before, it adds long-term value to your company. We are seeing a surge in mandatory ESG disclosures globally. So, and Australia is no exception. From carbon reporting under the NGER Act, or to supply chain transparency under the Modern Slavery Act, for example, regulations are getting tighter. So, but this is not only about compliance. Investors are demanding ESG. In fact, in 2022, responsible investment funds in Australia grew to 1.54 trillion. Huge figure. So a figure that is rising faster than traditional funds. And customers care too. 80% of Australians now expect business to actively tackle environmental and social issues. So ESG isn't a side topic anymore. It's at the heart of branding, reputation, financial performance, and operational resilience. So let's take a closer look at some of the key ESG frameworks that are shaping the regulatory landscape in Australia. These are important tools to help business like yours align with evolving expectations and stay ahead of compliance requirements, right? So Roger will dive deeper into the most important ESG frameworks and standards a bit later in the session. But we can start with the National Greenhouse Energy Reporting Act, NGER, as I mentioned previously. So this legislation makes it mandatory for large companies to measure and report their greenhouse gas emissions, energy production, and energy consumption. So if your organization exceeds specific thresholds, for instance, using over 100 terajoules of energy or emitting more than 50 kilotons of CO2 equivalent per year, you are legally required to submit annual reports to the Clean Energy Regulator. So, but NGER goes way beyond just ticking a box of compliance. It provides a structured framework to assess your environmental footprint, helping you identify inefficiencies, this is really important, and set reduction targets. So strengthen your sustainability strategy. And everything is being pushed for net zero, and it intensifies, right? So accurate emissions data, it's becoming a business necessity. So it's not just a regulation obligation. Next, we have the Task Force on Climate-Related Financial Disclosures, which is TCFD. This global framework, it's increasingly adopted in Australia and is fast becoming a gold standard for climate risk reporting. TCFD guides organizations to disclose how they manage climate-related risks and opportunities across 4 areas: governance, strategy, risk management, and metrics and targets. So the goal here is to make climate risks visible, not only to regulators, but also to investors, insurers, and other stakeholders. So, and while it's currently voluntary for many Australian businesses, there's a growing momentum to make TCFD aligned reporting mandatory in line with global trends. Adopting TCFD early puts you ahead, so shows leadership in climate resilience and prepare your business for the future. And then let's talk about the Modern Slavery Act 2018, really important. So this law requires businesses with over 100 million in annual revenue to assess and disclose the risks of modern slavery within their operations and supply chains. So right now, over 3,000 companies in Australia are reporting under this framework. It's about identifying the human rights risks, so particularly in complex global supply chain processes. So companies are expected to demonstrate due diligence, who they're buying from, where materials are coming from, and whether there is a risk of forced labor or exploitation. It's not just a moral issue, but it's reputational and financial as well. Transparency here protects your brand, so your business relationships and your social license to operate as well. So very important. And finally, we have the Australian Sustainable Finance Roadmap, which is developed by the Australian Sustainable Finance Initiative. And this is a forward-thinking framework that aims to align Australia's financial system with the sustainability outcomes, which means it encourages banks, investors, and insurers to fund businesses that are contributing to long-term environmental, social, and economic resilience. So the message here is really clear. Capital is shifting towards sustainable value creation. If your business aligns with ESG principles, it becomes more attractive for investment, lending, and partnerships as well. So in summary, these frameworks provide a strong foundation for meaningful ESG action. They help ensure that you're not only compliant, but competitive, resilient, and future ready. These are not optional anymore. They are becoming the new standard. So how do we start? How do we start implementing ESG? So it's a simple 4-step framework. Assess and benchmark. So you understand your current performance, you identify the gaps, and you establish a baseline. Engage with stakeholders. Very important. Bring your team, your partners, and your community into the conversation. ESG does not happen in isolation. And integrate the ESG into strategy. ESG needs to be embedded into core business plans, not treated as an afterthought. So it's crucial part of your operations and development plans. And then you measure and report. Track your progress and communicate it transparently. So frameworks like GRI or TCFD can help guide this. So we tailor your specific business to align with relevant frameworks. Here, an interesting case study. So real examples in how ESG is important and it's in action. Woolworths, which everybody knows, our Woolies, eliminated single-use plastic bags nationwide. Within 3 months, plastic bag use dropped by 80%, which means 1.5 billion fewer bags in the environment each year. They are not only improved their environmental footprint, but boosted brand reputation and even added 71 million in gross profit from reusable bag sales. It is a perfect illustration on how ESG can deliver both impact and value. There are other numbers as well. I can give you some stats. Deloitte found out that ESG integrated companies outperform others by at least 18%. PwC reports that 79% of investors now consider ESG as a core part of their decision-making. McKinsey revealed that 85% of millennials and Gen Z, which are the generations of the future that we need to work with, prefer to work for companies that are environmentally and socially responsible. So this is where the world is heading, and ESG, it's how we lead it. So what have we covered today? I just want to do a brief recap with you. To wrap it up, here are the key takeaways. ESG isn't just a trend. Remember, it's the foundation of resilient, ethical, and now forward-thinking business. Australian frameworks are evolving quickly, and aligning with them, it's actually crucial. ESG creates real value, financial, social, and environmental, and it builds trust with every stakeholder. I would like to thank you, but to finish, I really would like to leave you with this. In a world facing climate change, inequality, and shifting expectations, ESG is the bridge between doing well and doing really good. So it's how we build organizations that last, not just in the next quarter, but in the next decade. So it's how we create a world where business, people, and the planet can thrive together. I really appreciate your time. Thank you for being here again. And at this point, I will hand over to Roger, who will take us through the key ESG frameworks and standards and also official timelines in more detail with you. Thank you very much.
Thank you so much, Caroline. That's fantastic. Let's get my slides here. Oops. Everyone can see my slides there?
Yes.
Yes, it's all good.
Fantastic. All right. So thanks, Caroline. That's a really interesting introduction to ESG. I should also just say that I'm coming from Gadigal land in the Eora Nation, of course, here in Sydney. Why that's an useful introduction, and I think you make a really good point there about an organisation's sustainability efforts influencing investment decisions. I think it's a really good point to make. This goes as much for the perspectives that influence how we as consumers buy an item off the shelf or a service, be it food, clothing, banking, or even students looking at university study at. Sustainability often plays a key role in whether we want to buy into a product or service or invest in that. I mean, likewise with organisations, like ourselves as well. Tendering to supply a product or service. In many cases, we're having to provide emissions reporting statements to our potential clients as part of those tender processes. So even without the government's mandatory reporting, there's a real need to be proactive in this space. And that's really what I want to cover off on in my talk, which will include the mandatory reporting that came in this year, reporting frameworks, and a case study that highlights, as Carolyn has been touching on there, the profitability for Australian businesses and organisations who develop sustainability strategies and roadmaps. So let's start with the mandatory reporting, get this out of the way. It's the elephant in the room in some ways. From the 1st of January 2025 this year, the government legislated that large Australian businesses and financial institutions need to prepare sustainability reports containing their climate-related financial disclosures and what they're doing to mitigate the effects of the GHG emissions they're emitting. Mandatory reporting is being overseen by the NGR, as Carolyn touched on earlier, and it's also being managed by the Clean Energy Regulator. So the reporting of your GHG emissions statements must align with the accounting year, the Australian financial year, and submitted no later than the 31st of October following that financial year. And why this is all really taking place, and let's face it, it's now settled, the election's over too, it's really about the government's aim to reduce GHG emissions to 43% below 2005 levels, and by 2030, and to get to net zero by 2050. So that's the key aim here, and that's why it's really important for all companies to get on board, and then why there's so many good reasons to do that. So let's break this down a little bit more. So who are we talking about exactly here? From the 1st of January, as I was saying, so these large organisations, they're large organisations. They're people, they're organisations with 500 million consolidated revenue or $1 billion in gross assets. So out of all of these three criteria, you have to, if you're meeting any two of these, you have to be within that reporting period. And we do actually go into a little bit more detail on our newsfeed. Actually, it's a good idea. I don't know, Christine, if you could maybe post a link in the newsfeed to our newsfeed for people to read a little bit more information if they're interested. But let's carry on there. So from the 1st of January next year, this will be Group 2, which is medium-sized organisations. So any two of these criteria, that's 200 million consolidated revenue or 500 million in gross assets. 250 plus employees. And then from 2027, you've got your SMEs. So, 50 million consolidated revenue, 25 million gross assets, 100 plus employees, and so on. So 2028, it'll be half of that, it'll be 25 million and 15 million in gross assets and down the chain. So eventually it will get to all of us. And that will include all of the scope 1, 2, and 3 emissions, as Carolyn highlighted earlier. And that is what we all need to be thinking as project managers, as entrepreneurs, as business people. How do we do this, and how do we go about becoming part of this new regime? Because there are some, the Clean Energy Regulator can impose fines here of up to $66,600 for individuals and $333,000, for corporations. So those figures aren't small, and we need to be cognizant that this is an important aspect to now consider as part of our business strategies moving forward. So let's have a look in a bit more detail about reporting frameworks and standards. First of all, let's make this distinction here. Reporting framework in terms of ESG policies is really about the core principles of how information is structured. So, what information is collected and evaluated. Whereas reporting standards, they're more technical. So they give specific requirements and precise metrics for reporting emissions and the social and governance factors that impact the economy, environment, and people. And these three are really what we might class as a material topic. You may well hear consultants and this term, material topic, used around the industry. So the National Greenhouse and Energy Reporting Scheme, or NGER, it's a national framework for reporting GHGs, and as well as energy productions and consumption. So it's a really good framework to determine what you've got to report, But of course, if you are a threshold, as Carolyn, if you're a company that reaches a threshold, as Carolyn touched on earlier, you must report in any case. So let's just have a little look at the NGER website. This is a really good resource to have a look at. So you can have a look at the legislation that this comes under, as well as the thresholds. So there you have the 25,000 tonnes of CO2 just in scope 1 and 2 emissions, 100 terajoules of energy or more, and so forth. And you can also read about who are key to reporting under the NGER, and so forth. A very useful resource. Carolyn also touched on the TCFD, or the Task Force on Climate-Related Financial Disclosures, which is more of a general framework pivoted toward climate-related financial reporting. For instance, how an organisation identifies, assesses and manages climate-related risk and opportunities, and the metrics and how much that's costing in terms of the targets to assess and manage climate-related risk and opportunities. It's very much, TCFD is very much a bottom-up framework. So it takes the metrics and targets to inform risk management, strategy and governance to disclose potential impacts of climate-related risks and opportunities for your business, as well as your strategy and financial planning going forward. I should also say here that each industry is slightly different and may use a different reporting framework and standard based on what they've got to report. And to this extent, mandatory reporting regime is mostly agnostic in this regard, apart from the thresholds that the NGER disclosed just early on. Carolyn also touched on the Modern Slavery Act of 2018. Again, this is a framework to ensure organisations and businesses with revenue of 100 million register to report on the risk of modern slavery in their operations and supply chains, as well as what they're doing to mitigate them. So that's SMEs between groups 2 and 3 of the mandatory reporting groups that we just highlighted there. So that's going to catch a lot more organisations than the initial reporting phases. So registrations will be assessed against quite a stringent evaluation criteria, and they won't be registered if they fail that evaluation test. So it's not just a matter of having a broad look at your supply chain and satisfying yourself that there's no risks of modern slavery in it. You really do have to do the legwork and really investigate your supply chain to ensure that there is no slavery occurring within it. And again, this is a really useful site to view what is involved in making a registration, how many entities have registered already, how many have done that voluntarily. To do it voluntarily is a really recommended aspect as well, because it will just set you up. It tells everyone that your business is really concerned about this. But you can also add in, let's say UNSW. For instance, you can see the University of New South Wales as a reporting entity. You can see their various reports, and then you can actually read the statement itself. You can download that statement. So if you register and you fulfill all the criteria, you will appear in this database, and it's a useful tool, particularly for companies that are vying for business as well in tenders, to use as part of your evaluation process. Then there's the UN Sustainability Development Goals, or so-called SDGs, and at the heart of this are 17 sustainability goals which strategize how to improve health and education, reduce inequality and spur economic growth, while tackling climate change and working to preserve our oceans and forests. And again, a really excellent site. And talking about UNSW, they've actually, I noticed just the other day, they have aligned their reporting with a couple of these UN SDGs. One of them is quality education, obviously. So if you just click through to there, you can see exactly what this means in terms of the UN SDGs, the information required in it, how many goals are related to that, its overview, and so forth. Again, it's a really good way of highlighting your commitment to sustainability, as well as the social and the governance aspect of your business to other businesses and to other stakeholders. There are a host of other frameworks and standards, and we'll be returning to these in future webinars. But just to unpack a few more of them here, the Australian Accounting Standards Board, the AASB, basically provides a standard to embed climate-related risks into your annual accounting. You've got the ASX Corporate Governance Principles, which a little bit like the UN SDGs, they are a set of principles that you can align your reporting to, and to ensure that it's quite, you're making it very clear to your stakeholders and to your clients that you're very much demonstrating a lead in this area. Then you've got the science-based targets. These really take a very evidence-based approach to align your reporting to climate science and the Paris Agreement in particular, and what actions you're taking to investigate your supply chains and ensure that you're reporting correctly. Then you have the Global Reporting Initiative, or GRI. Again, this is an international set of standards that help organisations report on their economic, environmental and social impacts. And then you've got the Australian Sustainable Finance Initiative, which Carolyn touched on earlier on, which is basically a collaboration to help Australian businesses prioritise things like human wellbeing, social equality and environmental protection. And then you've also got finally here, you've got the SASB, which is basically a set of industry standards for industry by industry disclosures and sustainability. And we'll be, as I say, we'll come back to these in a little bit more detail. You could almost do a webinar on each of these alone. So it's a lot to cover just in one webinar here. All right, so look, how does all of this evaluation reporting get done? Well, there are a range of consultants and technologies out there. For instance, ESG technologies will assist you to measure, analyze and manage and report your GHG emissions and material topics. So all of these solutions are generally software as a service systems that will generate ESG reports that align with your global frameworks that we were just discussing. They also include things like predictive analysis and peer review modeling, and let you know how you're tracking in terms of your own peers within the industry as well. I'd have to say at Data ESG, we're pretty technology agnostic with this, and we work with different systems that are focused primarily on either emissions data management and or the full suite of ESG tools that looks at both the social and governance factors as well. But needless to say, there's quite a bit of work to do in configuring these systems. So we work with organizations to look at their requirements, do the necessary materiality evaluation, and work in consultation with them to set up the system to their requirements so that they can report on an annual basis moving forward. All right, so maybe I was a little bit too focused on compliance and the punitive aspects of Australia's reporting regime, but I thought I might just, earlier on, I just thought I'd finish off on a good news story here of a case study that really demonstrates how adopting ESG can provide real opportunities and dividends for organisations. An example here is the Australian data centre company AirTrunk, which started out life as an SME data centre, data center company really, that achieved very high profitability in a very short time, in part, and this is them saying this, through the implementation of ESG initiatives. And they did this by integrating ESG principles into the core operations, and particularly focusing on environmental sustainability and responsible governance. They committed to achieving net zero by 2030, and they did that as part of looking at how they could supplant their energy supply to their data centers with renewable energy solutions. And that really cut their emissions quite substantially. So there was a really good news story to tell. So it not only enhanced their reputation, but also attracted significant investment. So we just have a quick look at the timeline here. They reported in 2022, 2024 for the first time. 2022, they'd got to $74.4 million. They're expanding into the APAC region at that stage. 2023, that had reached $81.4 million. So obviously a very progressive growth trajectory there. And then in 2024, they'd achieved 94.8 million, marking quite a substantial year-on-year growth. Some of us may remember them by, once they were in 2024, they were acquired by Blackstone for 24 billion, and that significantly increased its valuation. And so what happened there was they actually awarded each of their 333 employees $22 million in bonuses. So it's about $65 million, $65,000 each in a bonus. So excellent return for its employees as well. So a really good news story there, and I think that sort of articulates a lot of what Carolyn and I have been talking about there. So that's really essentially your ESG value proposition. So you've got reduced costs, creating strong brand value, reducing your energy and fuel, as well as your exposure to legal and reputational risks. You've got increased financial return. So as Forbes found in 2020, companies with strong ESG ratings outperform the market by an average of 3.5% each. That obviously provides you access to capitals, and investors are much more likely to factor in ESG considerations into their investment decisions. And as Carolyn also touched on, it helps you maintain good talent within your employees, as again Forbes in one of their studies found that 65% of employees said they'd more likely work for a company with robust environmental policies. So, data ESG is here to help you on this journey. Our mission and passion really is to unpack the complexity of ESG reporting and to provide clarity and help organizations meet their sustainability goals. We're very much a data first. We've got very much a data first strategy to ensure, firstly, the accurate collection and analysis of data to drive your approach, but also to provide a holistic technology agnostic approach to measuring those emissions through a solution that's most or best for your organization, and to meet your stakeholders' values and goals as well. So in short, our services include ESG consulting, providing tailored advice within Australia's regulatory requirements, strategy development, future-proofing your organisation for long-term success. We also provide consultations and implementations of emissions data management software to meet your compliance requirements. And finally, ESG reporting and disclosure to assist you making your reporting and making sure that that's transparent and meets the needs and standards of that compliance, just to build your business going forward and to develop stakeholder trust. So look, that's all we got for you today. Thank you so much for joining us. And we'd be happy to open the floor to any questions that you have now.
Thank you, Roger and Carolina. We do have a few questions in the chat. From David, we've got, are there prescribed dates for information collection and submission? Are there penalties if the submitted information is incorrect? And who monitors this? And is it legislated? And I know we did touch on this, but would you like to elaborate on any of those points made in that question?
Perhaps Carolyn, do you want to address that?
Yeah, I could answer, yeah. So David, thank you for your question, and it's a very interesting question. So I believe that so we have regulators that will oversee this. So the Clean Energy Regulator, for example, oversees emissions and energy reporting under the ENGIE Act, as we previously mentioned, and can issue penalties for false or incomplete disclosures. Because again, everything is based on science, because it's based on your data. And there are regulators that are attorney, like for example, the Attorney General Department oversees compliance under the Modern Slavery Act, although it currently uses a naming and approach rather than like directive fines, but they also disclose who are not complying correctly and who is complying correctly. Financial disclosures, including climate risk aligned with TCFD, for example, they may fall under the scope of ASIC or APRA, which are also overseeing who is doing correctly or not. So particularly reporting becomes mandatory for listed and larger companies, but there is a way to avoid greenwashing. Let's say if you're not doing correctly, like we use data based on science, and also the software that we use for data management, they would issue red flags or things that we need to understand and actually link to the frameworks that are specific to your company and tailored to your needs. Roger, would you like to complement a little bit?
I think you've answered that really well, Carla. We did touch on it in the webinar in terms of the specific dates as well, being the financial year that you have to report to, and before the 31st of October of that year itself.
Thanks, guys. I think you've answered. Hope that's been answered to David's satisfaction. Move on to the next question from Edgar. Thank you, Edgar. With so many different ESG frameworks and standards, how does a company select the best one for that organisation?
Well, I might start off on this. Carolyn, you can touch off on it as well if I miss anything. So, part of a consultation process, working with a consultant, would be the knowledge base that would bring to your organisation, to understand where your organisation sits, do the necessary evaluations of your company, to understand primarily what your material topics are, so that can then be implemented within a ESG system, to then be able to report on those particular topics and what you're doing. And I was just going to say there's a good link here, and I was just looking at a way to actually add that to the system, and I've just lost you for a minute, which is the materiality checker for the SASB. What I might do is just pop that in the chat in a little second while Carolyn's talking. Do you want to touch on anything that I missed there, Carolyn?
Yes, well, it was really good. And that's exactly how we normally and I would like to add, so it's really a good question, Edgar. So it depends on your industry size, stakeholder expectations, and whether you are locally focused or operating globally too. So we start by identifying your regulatory obligations. For example, if you fall under Australia's NG Act, that will determine your emissions reporting. And if you're above the revenue threshold, the Modern Slavery Act will apply to you. So we look at the stakeholder needs as well. If your investors are asking for TCFD aligned disclosures, if your clients are requesting ESG performance as part of the procurement. So everything that helps to prioritize. Of course, if you're not meeting the thresholds anyways, it is good for you to be ahead of the time, even if you're a small company, to actually try to follow those expectations and frameworks, at least the main ones in Australia, as we previously touched on it. Yeah, so I would say that. So for many companies, we recommend starting with a globally recognized baseline, like the Global Reporting Initiative or the TCFD. But then each company has your size and has your particularly your specific needs and also your operations that will be giving us hints in how we're going to align with the frameworks that are needed.
And I've just added that SASB materiality finder there in the chat. So that'll take you straight through to the materiality finder, and you can actually find your industry in with that and what particular topics you need to be reporting on within that industry.
Excellent. Thank you both very much. We have time for one last question. Okay, we've got one more on privacy, which is a subject close to my heart. Just how do we protect the privacy of the staff on the social reporting? Because obviously we're reporting information that relates the personal identifying information. How do we protect that when we're reporting on social governance?
I'll give that to you, Carolyn.
Okay, that's very important consideration too. Normally, when we report on social indicators like diversity or well-being or staff feedback, we always follow strict data privacy protocols. There are protocols for that we follow, like models that we need to follow. So personal information is, for example, is de-identified and aggregated. So we never publish data that could expose individual employees. We also align with our practices with Australian privacy laws. So if you are subject to the Privacy Act and GDPR equivalent rules, for example, we ensure compliance there too. So we are obligated to do it. So in addition, if we conduct surveys or feedback processes, we give staff the option to participate anonymously as well. So we value a lot data privacy and we follow models for that.
Fantastic. Thank you very much. And thank you both for presenting today. That was fantastic. Thank you very much.
Thank you.
Thank you.
All right. Well, I will bring that to a close. Thanks everybody for coming. If you want to reach out to us, please do. And thank you all for your time and enjoy the rest of your day.
Thank you so much.
Bye.
Thank you.